What's going on, guys? It's GBP baby. Welcome to another weekly review. I hope everybody's doing well, and I also hope you've checked out my recent video on dollar, which I posted the other day. But anyway, we're going to start with economic calendar as per usual, and you can see that this week we only have high impact news on Thursday and Friday. So to be honest, I do think this week's going to be a lot more relaxed after a while. Monday, Tuesday, Wednesday, I think we'll obviously see the high get made, preferably on Monday or Tuesday, and then I'd like to think that we'll have a reversal at the end of the week with Thursday and Friday. So pretty simple. In terms of my trading days, I'm looking to trade on Tuesday, Thursday and Friday. I don't tend to trade Mondays like that, and Wednesday I can imagine they're going to consolidate, because typically on quiet weeks like this, you'll find that Wednesdays can be quite consolidated because they're building in orders for then they're building in orders, engineering liquidity to then get swept on the Thursday and Friday with the news. So should be quite interesting. I'm looking forward. And yeah, let's head over to the charts. So you can see I'm looking at dollar. We are going to start on the weekly. And again, if you haven't watched my recent video when I explained the week last week, definitely go check that out. Very insightful. And yeah, I'm going to start with how we usually do things. So I'm going to be looking at premium PD arrays and discount PD arrays and where I want to see price trade to. So overall, I want to see a down close week. Why? Because we're bearish. We have been for a while. And I'm looking for a run down into last week, 2 weeks ago's low. So this week's low, and then this low down here as well. So let's get all of that marked out. So this is going to be sell side liquidity, weekly sell side liquidity. We'll move this to the right, and we'll make that thicker. And then we've also got weekly sell side liquidity down here as well. Now this liquidity down here is also coupled with a fair value gap, so there is an imbalance down there, which is another reason that I'd like to see price draw down there. So we also have a weekly fair value gap, and it'd be nice to see if price can start to make its way down there. Now after last week, we have actually created a fair value gap, an implied fair value gap. So from this low to this close right here, you can see there's only been downside delivery from the wicks. Meaning that if once we trade back into this range, I'm looking for this to provide resistance to send price lower. So I am going to make this red, and I'm going to write weekly implied fair value gap, make that smaller. And then as we drop down to lower time frames, we should be able to find some PD arrays within that range that price can key off. Now, I am also going to draw our attention to the 50% level of this wick, because this will be the very highest I am allowing price to trade for me to be bearish on dollar. So let me get that marked out as well, make that red, dashed, make that thinner, and then we can put weekly consequent encroachment. So now we have premium PD arrays to key off of, which are these, and then we have discount PD arrays as targets down here and here. Don't get me wrong, last week's low is also a target, but generally speaking, I want to see us, start to reach for this sell side liquidity down here. Also, you'll remember from if you watched the previous video, you'll know that we traded to the 25% level, so the next target would be this 50% level. Then once we reach that, I'd be happy to expect this low to get taken out. So I am also going to get the consequent encroachment of this drawn out as well. We'll just copy this lower just so we have it on our charts. So that's everything on the weekly. Now let's drop down to the daily and see what we can find. So you'll see how we traded higher, filling in this imbalance last week and turning around at this bearish order block quite beautifully, and you can see how we've closed at the bottom of that weekly implied fair value gap. Here's that weekly consequent encroachment. We haven't quite created a daily bearish order block yet, but on the lower time frames we very likely have, so we'll be looking at those for sure on the lower time frames. Now these lows down here, this is what we call relative equal lows. Definitely got my eyes on this, and if you watched my videos last week, you'll know that I've had my eyes set on this for a while. So I do want to see if price can draw down to that daily sell side liquidity, and that would be like my first discount target for the week. We also obviously have all of these lows as well, but I'm not really going to pay too much attention to them, because so long as we're drawing towards this, I'm pretty happy with price. So on the daily, generally speaking, not really much to mark out. Again, we've got the weekly fair value gap down here, lows here, here, and relative equal lows here. So moving into the new week, in terms of creating the high on Monday and Tuesday, this is very high, so I want to see price trade. But like I said, once we drop down to the 4 hour, we should be able to find some more specific PDA rates to key off. So one thing to take note of, let's look at how price is delivered. Again, if you haven't watched yesterday's video or the previous video, definitely go check it out. But we ran out buy stops above here. So now that we've taken out internal liquidity, we should be looking for some kind of external liquidity to match that with, and that's where this weekly sell side liquidity becomes relevant. If you want to learn more about internal and external liquidity, make sure to join the mailing list. The link is in the description, because I'll be covering much of those topics in my future content. But for now, we can look at this weekly implied fair value gap, and you can see that there's a 4 hour fair value gap right here and quite a large fair value gap up here as well. What I am going to draw our attention to is an inversion fair value gap just above the weekly consequent encroachment. Price should not need to trade back up into here. Remember, this level is the very highest I'm allowing price to go on dollar for me to remain bearish, and this just adds to it because it's an inversion fair value gap. Why? We delivered on the upside, and on a closing basis very bearishly delivered on the downside, meaning that if price is to return to it, I want to see resistance at that point. So overall, I'm looking, like I said, I wouldn't be surprised if we did move lower moving into Monday, but then moving into later Monday, like New York Monday and Tuesday, I would expect to see some kind of rallying. That will take us into the weekly implied fair value gap, and then that's where I'll be looking for shorts on dollar with longs on the pairs to start expecting a run down below these lows, these lows, these lows, nice 4 hour fair value gap, and then if price wants to be overzealous, that's when we can start thinking about the weekly sell side liquidity. But like I said, we're not necessarily in a rush. It is still only Sunday, so we need to be mindful of that and let price do its thing. But overall, I am thinking it's going to be quite a smooth week. Let's drop down to the hourly just to take a quick look, and you can see our price came lower. Again, I wouldn't be surprised if on Monday we did trade a little bit lower first, engineer some sell stops, so create a reversal, trade higher into Tuesday to create, to then create the high of the week, and then I'd like to see continued downwards pressure towards that daily sell side target and consequent encroachment. So I hope that all makes sense. Should be quite a good week. Let's now look at GBP USD. Now what you'll find with GBP USD is I have actually applied the data range. I will be talking more on this next week, but what you'll find is that where we are in the range is quite significant. So let's just start with the weekly first. So on the weekly, you can see how we're pushing higher. We've just taken out stops above here, and then our next target will simply be this high right here. In terms of discount and premium arrays, we have this massive fair value gap that has formed now. So this range, if price does want to dip back into it, should provide what? Support. Why? Because we're trading on higher, so these levels should be able to provide support for price. Another thing is an inversion fair value gap right here. We'll drag this through. In fact, we should probably get rid of this and pay more attention to this one. Why? Well, we delivered on the downside and then we closed on the upside above it, meaning that this should be able to provide support for price to springboard higher to its next high, which will be up here and potentially up here. So let's get the midpoint marked out as well. And if you've been watching pound recently, you'll know that it's been significantly stronger than euro. But yeah, let's go down to the daily and take a look. Actually, before we go down to the daily, let's get that weekly high marked out as weekly buy side liquidity. So on the daily, here's the data range, and you can see that the high of the past 60 days is here and the low is here. And since then, we've been just treading on higher to some kind of, pool of liquidity, which would be up here. Now, we've traded above the 50% level. We've just reached that 75% level. Once we dip above that, I'm happy to be long with the expectation to run for obviously this buy side and the 60-day high as well. Now on the daily, there are a few more PD arrays, such as this bullish order block. Now what you'll find is that dollar didn't take out Thursday's low, but pound has taken out Thursday's high. So this is what I mean. Pound showing significantly more strength right now. So I will be paying close attention to this daily bullish order block open. So let's get that marked out. And then as price comes and retraces back into this, maybe on Monday or Tuesday, I'll be expecting this to provide support to send price higher. If we dig deeper, I will allow price to come into this bullish order block again, because you can see we stabbed into that on the Friday. But preferably, I'd like to think that this order block is respected and will be enough to send price to the next level, which is that weekly buy side liquidity target. Let's drop down to the 4 hour, and you can see how we're kind of just entering a little bit of a consolidation. There is a fair value gap down here at the daily bullish order block. So like I said, as price is trading into this, I'll be expecting some kind of reversal, maybe a New York reversal, London reversal, that can send price into send price higher. So definitely keeping an eye on this range between this bullish order block and this bullish order block. If we get any lower than this bullish order block right here, that means that dollar's probably a lot more bullish than I realized, and then we can start thinking about these lows as a target. But I highly doubt that. Why? Because again, our 60-day target is up here. We've reached the 75% level, and if you watched the previous video, you'll know I was talking about how when we reach the 75% levels of ranges, price tends to just continue and run straight for the entire range high. So very high possibility right there. Let's drop to the 1 hour. And again, it's just a matter of letting Monday trade or Monday morning trade before we can think about looking for setups. So I hope that all makes sense. Let's now finish up on Euro USD. We'll start here with the weekly as well. Now I haven't got the up-to-date range here, but obviously we can see where the highs are that price is likely drawing to. And you'll see how last week we traded down into this gap, into the 50% level, and came off of it, creating a gap below here as well. Our next target will be the previous week's high, and then this high up here. So let's get those marked out on the weekly as buy side targets. Now the fact that we've created a gap here, I do like that because it shows a level of bullishness. That means now that I'm looking at this long wick created last week and the 50% level. Why? Because this should be able to provide support for price if we are to trade on higher, meaning that this is the lowest I want to see price trade on euro for me to remain bullish. So let's get that marked out and dashed, and we can put weekly consequent encroachment. And now as we drop down to the low time frames, we should be able to find PD arrays that we can use to key off to then, get in on setups, etc. So here's the daily, and you'll see how we came lower and then had a nice turn at this fair value gap right here. Very beautiful price action, guys. Volume respecting it as well, even better. And we haven't quite taken out this high, so we don't have a bullish order block, but we do have an inversion fair value gap where between this low and this open implied fair value gap, again, we should be able to find support in here. The fact that this inversion fair value gap as well lines up nicely with the weekly consequent encroachment adds to our confluences as to why this range should be able to provide us support in the new week. So definitely keep an eye on this. I am going to keep the midpoint marked out actually. We'll get it black and dashed. And like I said, if price dips down right down to that consequent encroachment, that should be optimal entry for us to think about longs, assuming we are bullish and dollar is respecting the correct PD arrays. So I'm going to write daily implied fair value, daily implied inversion fair value gap. This is quite an advanced fair value gap, I guess. But again, from all the back testing I've done, it's legit, as in I've seen it work or operate. So let's now go to the 4 hour, and what you'll find is that euro didn't quite take out this swing high. In fact, let's see what dollar did. Dollar hasn't taken out that low, but pound has taken out that high. So there's something going on. Euro's obviously shown a little bit more weakness. So moving to the new week, it will be a matter of seeing how we treat this range. Again, we have a fair value gap down here on the 4 hour. Price may want to fill that. That's completely fine. So I'll allow for price to come down there, and then depending on what we see from there on, will allow us to think about framing longs. For example, if we trade down, fill the fair value gap, and dip into this at say like 8:30 on Wednesday or Tuesday, I can imagine that that's the low, and then I can go long with the expectation to start running for this buy side here, 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 and eventually this weekly buy side liquidity target. If price fails to find support inside of this daily implied inversion fair value gap, like price just gives way, then once it gets below these lows, it will probably run very quickly to some kind of sell stops, such as below here and below here. But generally speaking, I'd like to think this can provide support, as it will stick with our bias, and we can start looking for easy longs into all of this buy side liquidity that has been getting engineered in. So that's going to be everything, guys. I hope it all makes sense. Very simple. Again, don't trade Mondays if you're not clued up. I tend not to trade I don't trade Monday. I don't trade Monday London session, but usually after Monday we can get a better look at price, and it does help us frame the rest of the week. So yeah, hope you stay tuned. Drop a like, drop a comment, smash subscribe, and join the mailing list if you want to learn more, and I'll catch you in the next one. Peace.